All right, traders, happy Monday to you. Welcome to the live, no, not the live room. Welcome to the 12-week transformation private Q&A group. Morning, Charles. Uh, Funny, actually, I didn't even look at this chart this morning, but I want to talk about the 2618 trade this morning. As always, you guys, if you have questions, type them in. But I did want to talk about the 2618 trade. It's a purely coincidence that Jason brought it up in the war room meeting as well, but just want to give you guys just my opinion on how I look at it. But first, let's just talk about what it is for you guys that may be new. The 2618 is essentially a second chance entry at a double top. So what you're waiting for the market to make a move up. We have our retracement. You get your double top, but for some reason, either you miss it, maybe it happens during a time where you're away from your computer, but you missed the initial entry on a double top and you're looking for a second chance, and it really becomes very, very similar to a trend continuation technique. So the first thing that we need is obviously the double top. That's where we're going to get our 2 from. After we get that double top, or I should say if we get a valid double top, then we look for a break and close below the valley of this double top. I don't know the correct terminology for this. I should learn. Do you know it, Charles? Does this have a name? I always call it the peak or the valley. I don't know. I got to find something for the name of this, but if you guys know, let me know. But you wait for a break and close below this part of our double top formation, the midpoint of our double top. Maybe I'll do that, midpoint. And then you're looking for a retracement back up into that double top. And the 618 comes for this. One way to trade it is taking your Fibonacci retracement tool from this swing high right here, the last move of our double top, the second test, down to wherever price action extends to, and you're looking to buy, or in this case, sell it at the 618 retracement. Now you don't have to. I highly encourage that if this is a strategy that you want to trade, test it and come up with potentially a different way to trade it. Technically speaking, as a trend continuation trade, our zone starts right here. It starts at this midpoint of the double top, and it can go all the way up until the previous structure high. So anywhere in this yellow box, anywhere in this zone is the potential retracement. The 618 is a good place to have on your radar, kind of like your trigger, but you don't have to take it aggressively, meaning you don't have to put a limit order right there on the 618. You can easily do something like this. You can say, if price action hits the 618, then I wait for blah, blah, blah to happen. One thing I like to do is, or like to teach, is do this. Once price action hits the 618, then you go down to your lower time frame. On this case, I'm on a 15-minute chart, so I'll go down to a 5-minute chart. And then you look for an entry reason on that lower time frame once that 618 is triggered. And again, that entry reason could be a smaller double top at the 618. It could be a lower low, lower close. It could be, we used to teach it originally, the moving average crossover. Kind of took that out because we don't really use moving averages for anything else. But you can certainly go down to a lower time frame and look for your entry reason on that lower time frame. And there's pros and cons of that. Obviously, if the market comes up to spike that 618 and we retrace right back down and you're waiting for a more conservative entry, well, you're never going to get that entry because it fell off immediately. On the other side, if price action just continues to shoot up, well, aggressive traders, they're going to take a loss because they just got an aggressive with a limit order, where more conservative traders may have never got triggered on that entry reason. It just would have sat out the trade. So like everything in trading, there's always a give and a take. The more aggressive you are, the more opportunities you're going to involve yourself in, which also means potentially the more losses you're going to take. If you're more of a conservative trader, the less opportunities you're going to involve yourself in. So you're probably going to miss a handful of winning trades, but you're also going to keep yourself out of losing trades as well. So it really just goes on what is, what works, what meshes well for your trading philosophy. And what type of trader are you? Or what type of person are you, I should say? Are you just aggressive by nature or not? And here's a great example of a double top here, or a 26.18 trade on the pound dollar. And it's funny because I brought this over by pure coincidence. But you're looking, let me just delete this. You're looking at price action spiking up here, giving us our initial top. Boom. And actually, this is going to be, is this going to be valid? May not be valid. Not yet valid. Giving us our initial top. We retrace right down here. We retest for our second top, giving us a valid double top right here. We then see, we can draw this midline out right down here for our midpoint. You can see that price action comes and ends up breaking and closing below that level right around here. And then in this case, we don't quite come up to the 618, I don't think, but you can see the formation. We come up, we just nip or just miss that 618 retracement by a single tick here, and then we roll over to complete the trend continuation trade. So a good example of a 26.18 trade here. Now, any questions about the setup or the rules of a 26.18 before we move on? There's only a handful of you in here today, but I know a lot. Well, if you guys are watching the recording, well, you can't answer, you can't ask a question. You can email me. But. All right. Now, what I want to talk about the 26.18 is really, for me, the way I look at it. I look at it as a technique and not a strategy. And there's two ways you can look at everything in trading, a technique or a strategy. For example, a strategy would be a Gartley pattern because it's something that I want to enter consistently. Every time I see a Gartley, I want to trade the Gartley pattern. You know, obviously, unless it has a horrific risk reward or it's, you know, forming right before a non-farm payroll. But in general, I want to trade every Gartley pattern. That's my strategy. A technique is more like a double top. It's a way to get involved in a move, but I don't necessarily have to take every double top. I look at the 26.18 the same way. Nowhere in my rules does it say that I have to take or involve myself in every single 26.18 trade. Now, there's nothing wrong with doing that. It's a successful strategy. When did I do testing on it? A couple years ago. A couple of years ago, I think I did testing. It's about a 50% hit rate. So you can make money off of it. But I look at it more of a technique. So the way I use a 26.18 is I just don't trade random 26.18s, but I look for 26.18s that line up with my overall view of the market. So therefore, if I'm in an area where I'm looking, was it last year? All right, there we go. Thank you, Joe. If I'm in the market, I'm looking for an area where, you know, so say the time frames or my higher time frames and my analysis, my IPDE is telling me I should only be looking long, only should be looking long. And I get a bearish 26.18, I don't necessarily have to take it. And again, I think you guys should be, it depends on what type of trader you're going to be, but you got to, at some point, you got to separate the techniques that you trade versus your overall view of the market. I tell this story a lot. I used to trade ABCD patterns. That's you know, the first thing I traded. And I thought that if I just traded every single ABCD pattern, then, you know, I would make profit. And I found out the hard way that that's not the case. So now I do trade ABCD patterns, but I only trade ABCD patterns that line up with my overall view of the market. Same with double tops and double bottoms. I don't trade random double tops and double bottoms. So let's use this as an example. Again, I haven't looked at this chart. I don't really know what pound's doing, but maybe this is when I looked at it. Let's say we get a random double bottom in no man's land. Let's say we get a double bottom right in the middle down here. Just because it's a double bottom doesn't mean I have to trade again. And the point I'm trying to make is do your IPDE first. Your identify, your predict first. Have that view of what you want to take in the market. That's a lot more important than just looking for the individual technique. And I think a lot of you guys make the mistake of, you don't really you skip your higher time frame analysis and you just look for, oh, that's a double bottom, I should sell it. Or that's a double bottom, I should buy it. That's a double top, I should sell it. But you have no idea what the market's actually doing. And what you're doing is you're simply involving yourselves in lower probability trades because of that. And again, our agenda isn't just to take trading opportunities. It's to take high probability trading opportunities. And you only get those when everything is lining up at the same area. So I would encourage you guys. Do any of you guys trade 2618 consistently? Is that a strategy that you have? Trade everyone? Any of you guys in here? Vern says no. Do you trade it all, Vern? Or well, Vern, you're pretty new, so you might not even gone over it yet. How do you guys look at it? Do you trade it at all, or just in certain cases? Still trying to learn it, if the occasion presents. It's a pretty simple. If you can identify double tops and double bottom, 2618 is pretty simple to trade. Again, essentially, it's like a second chance. The market giving you one more chance because it's basically a rotation in trend. So you got the market coming up, swing low to swing high, outside return, swing low to swing high, outside return. We get a swing low and up, we get stuck right there, right? So we don't make a new structure high, right? At this point, we still don't know. We don't quite know yet whether this is going to be a trend continuation or counter trend opportunity because if we get a higher high, higher close, we know we're seeing trend continuation. If we don't, we know we may see a reversal. What do we need to see a reversal? Well, we need to penetrate our previous outside return. So once you get that, boom, we call that a bearish rotation because now we've been taken out of our bullish trend. Again, bullish trend, bullish trend, bullish trend, bullish trend, boom, stop. Now we're in a bearish rotation. We don't quite have a bearish trend yet because we need these 4 moves or 3 moves. We need 1, 2, 3 to give us that trend, right? We need extension, retracement, new structure low. Again, initial low, outside return, new structure low. This is the 3-part move we need to say that we're in a bearish trend. Right now, we don't have that. What do we have? We have, well, our initial structure low, but that's it. So we're in bearish rotation. So the idea behind the 2618 is once we get that outside return, we're essentially betting that, well, we've rotated out of this trend and we're looking at hopping on the first possible move of that new bearish trend. So that's kind of the mindset behind it. But hey, looks like a lot of you guys don't use it, which is 100% fine, guys. I always recommend mastering one thing. Master one thing, and then once you master that one thing, then move on to something else. That's the cool thing about trading. There's no time limit. I guess the only time limit is life. But, the cool thing about trading is you can make a boatload of money trading a single strategy. So there's no need to trade 4 or 5 different strategies. You don't have to do that. You can easily trade one. And if you have a passion for trading and you want to learn more, well, you can easily make money while learning new strategies. So that's pretty darn cool. All right, so that's my 2618 spiel. Like I said, not a lot of interest in it, but what questions do you guys have for me coming into this week? What question do we have? I didn't get any email questions this week. Now, we had a big graduation about 2 or 3 weeks ago to people that joined in, what did they join in? End of November, December? So our group is thinning out. Not too many of you. Well, we'll have a bunch more soon, but we're thinning out somewhat. Just some stragglers hanging on. I know Vern, you're new. Are there any struggles you're having in the initial modules, initial weeks that you've been going over? Or is everything clicking okay? Nope, just going over it. Okay. I guess I'm doing my job, Charles. I guess I'm doing my job. Let's see what else is going out here. Looking around. I typically don't trade Mondays at all, so I haven't looked around the markets at all. See what Jason's doing. Jason sold Euro Aussie on an ugly 26.18. Check out Euro Aussie. We ended up last week pretty good. I'm actually pretty. I know I shouldn't be. I'm actually pretty surprised at the success we've been having this year in the syndicate. This is the first year that, me and Jason have always traded, but we never kept syndicate stats because it doesn't, we don't really care. Just for an honest opinion, we just don't really care. But it's been a tracking it this year has been pretty decent just to see how our styles kind of mesh together. And I hope you guys are gaining that experience. It's literally it's rarely are we both in the dumpster at the same time, meaning that Jason's had his handful of bad trades, not bad trades, trades that has put him in the drawdown. I've had my handful of trades that put me in the drawdown, but it's pretty it's pretty cool how it's been happening. I've been hot when he's been cold. He's been hot when I've been cold, and it creates this very, very nice equity curve here, which is pretty cool to see. So I'm excited. I was looking at I was taking the stats. We're about 12 weeks in, and I was saying if we just duplicate it, I know we're a far away. We can't predict this far out, but if we just duplicated this return for the for the remainder of the year, we're gonna have like I think, Charles, we're gonna have like a 200% return. I think. Now, again, I don't know if we're going to duplicate this. I don't typically have pretty high expectations, but that's just me. I just kind of go with the flow one day at a time. But I was bored and I was looking at this. Let's just see what happens here. If we were to duplicate this for the next 12 weeks, what are 52 weeks in a year? $48 weeks in. If we were to duplicate this, 120% return, almost a 300% return with money management. That's got to be a little choppy. No. I'll tell you what. Here we always talk about what's when I talk to you guys about going on to manage money. Say if you're going to continue to make trading your business. What do I always say is the most important thing about managing money? What do clients not want to see? You guys remember? And I'll get to your question next, Vern. What do clients not want to see when managing money? What is the cardinal sin, right? They don't want to see a big drawdown, right? You want to see a nice smooth equity curve. And here is you can see this is a nice smooth equity curve, right? Here's the benefit of a nice smooth equity curve, right? You can see again through 12 weeks this year, this is the actual stats. We haven't had a big drawdown at all. We only had one big month, right? And there's really nothing spectacular here. We've had an 11% month, and that's not really, if you've been trading, that's not a big deal. It's nice, don't get me wrong, but it's not, it's not one of those things where you go out and buy out the bar or something. But look at our drawdowns, 1%, 3%. This is point something, 3%. We've been able to stay really 3% was our biggest drawdown. And the beauty of that happens when you go over to the right side. Remember, the left side of this chart here is no money management. This is just straight up trading, set position size, right? 120% return if we can keep this up the rest of the year. Again, no way am I saying that we're going to. It's just the pessimistic side of me, but we could. Here's the beauty. When you go to the money management side on the right, you can see the units. This is how much you're trading, right? So this would be what? What do I have this set to? This would be 2 mini lots based off a $10,000 account. So a pretty non-aggressive approach to the market. But you can see 2, 2, 2, 2, 2. Week 8, we've hit 3, right? So we've hit that next level in our money management where we can increase our position size, right? Boom, boom. And you can see we take drawdowns in here. But even that 3% drawdown with the bigger position size is only a 5% drawdown. And then what happens later? Boom, we go from week 8 to week 13. Guess what we did again, guys? We increased our position size again. Now we happen to hit a drawdown right where we did it, but because we're not getting that big of a drawdown, even with an increased position size, my drawdown is still 1%. And here's what used to happen to me all the time. This used to happen to me all the time. Let me give me 1 second. I'm going to actually record this too. I probably could just steal it from Charles. But just in case I say anything nice. Give me 1 second, guys. And then we'll talk about CTS. But technically, Vern, the CTS, and we're going to put this on pause until I get my video recorder up. But technically, Vern, the CTS, the initial checklist is what we felt is most important in the market. So what we want to look for on a consistent basis. But you do have the option to add things and a little bit. But I would recommend starting with just the basic list. And then as you evolve as a trader and as you start noticing trends in the market that are very important to you, that's when I would consider maybe adding something to it. But again, we'll look at that in a little bit. But going back to the money management spreadsheet, again, here's the key. The key is to keep that drawdown small. And you can see the reason. Here's what I used to do. As soon as I would increase position size, and let me know if you've ever done this before. As soon as I would increase position size, like right here, going from 3 to 4, I would hit that drawdown. However, back in the day when I was struggling, my drawdown would be so big that it would basically take away the previous 2 weeks' earnings. Have you guys ever done that? Have you guys ever increased position size and then hit a slump in your trading? And then because you increased your position size, you've basically lost double of what you were supposed to. And now the 2 months ahead of that are for nothing. Danny says, yep. Charles says, yep. It was every time. It didn't. And, you know, what I was doing, I didn't have a good money management strategy. This is why we use the smooth ratio. I didn't have a good money management strategy. What I was doing where I was just, every time I would hit a certain amount of pips, I would increase it. So I'd be like, hey, once I make 400 pips, I'm going to double my account size. Why? I had no good reason for doing it, but that's what I was going to do, right? Because I was hot. And if I was hot, I want to keep the hot streak going and make more pips while I'm hot. And of course, I would get cold. I would have a month where I did it month to month, not week to week. But I would have a month where I had maybe a 200 pip drawdown. And normally that's not too bad. Maybe a 200 pip drawdown is maybe a 1 or 2% drawdown. But because I was doubling my account, now that 2%, that 200 pip drawdown was now 400 pips. And now 400 pips was everything I made the previous 2 months. I'd be back to square one. And it was a consistent pattern of that. Really, really good trading. 1 month of drawdown, all of it's gone. Back to square one. Really, really good trading. Bring the account up. 1 month of drawdown, back to square one. And I was going nowhere. 2 steps forward, 2 steps back. But you can see when we keep that drawdown small, even when we increase position size, take a 1% drawdown with the new four unit position size, we're still maintaining that same level. And you can see as the year goes on, we go from 4 to 4 to 4. It's smooth. It's 5. I'm sure we'll go backwards at some point, but I don't think we ever go back 5 to 6. Only at one point we go back. We go from 6 to 7, and then we go 7 back to 6. We have our big 5% drawdown month right here, and big relative, not really big, but. And we go from 7 units back to 6 units, but then we come right back and go back to 7 units. And you can see the difference this makes. Instead of having that 120% return on equity, you're now close to 300%. Do you guys see the power in this, in money management? Give me a yes if you do. You could take normal trading, which is this, and turn it into that. You've basically, what, doubled your return? Almost tripled your return by doing nothing more than implementing a money management strategy. Nothing more, right? You didn't do anything fancy. We didn't take more trades. But the key is you got to keep those drawdowns small, because if you start doing stuff like this, if you start having big 800 pip losing months, and you get a habit of doing that, then you're going to start bringing that money management all the way back down. It's going to be a lot more rocky of a ride. So I don't know how we got on that topic, but pretty cool. Now let's talk about CTS now. Let's talk about CTS. Vern had his question. The initial CTS score is looking like this. Let me go ahead and bring open my my checklist. Trading Power Forex ASE trading plan. I always keep my first trading plan with me, or one of my first. I still have the binder which I printed out. I literally printed it out and had a binder to open the binder up. I carried everywhere I went, and I still keep that with me. Let's see if I can find CTS here. CTS, Combined Technical Score. So here are the initial CTS requirements. And again, CTS is based off of it's essentially the value in the CTS isn't really the score system. And what you'll find out is that as a trader, after you get comfortable with trading CTS, you'll eventually just go away from it. You'll stop, because you'll see you don't need it. The value isn't the score system. It's rather the routine of how you look at the market. So we started off with what we feel is important, and it's RSI, overbought or oversold. We've got structure in here. We've got Fibonacci. We've got our higher time frame confirmation. We've got the ABCD pattern. We've got advanced patterns, which you really don't need, to be honest with you, because if you're an advanced pattern trader, you're going to trade these regardless. So this doesn't really need to be in there, but it is, because it's something we look for. Additional test of structure. This is essentially double tops, double bottoms, triple tops, triple bottoms, and then RSI divergence. And the question was, is it up to the trader what score they use? And the answer is yes. And it's going to go back to your trading philosophy and what is important to you, and how aggressive of a trader are you. A super aggressive trader may only need a CTS of 3. You get if you have a super aggressive philosophy, super aggressive personality, and you're saying, hey, Akil, I don't need double tops or double bottoms. I just need, if I have structure and ratio confluence, that's enough. So I can take a CTS of 3. You may have a conservative trader that is the exact opposite. When I first started trading CTS, I was the exact opposite. I had requirements. So here's what I needed to have, right? No matter what my score was, I needed the RSI to be overbought or oversold. I needed to have some type of structure. I had to have RSI divergence, and I required a double top. So if I didn't have RSI divergence, additional test of structure, minor structure, and RSI overbought, I couldn't take the trade. So my minimum was a CTS4, but it had to be a specific type of CTS4. So even if I got an ABCD pattern completion with higher time frame confirmation and ratio confirmation, which is a CTS4, I would still have to wait until those other things were accomplished. Does that make sense? Yes. No. Yep. So I was very conservative. So a lot of the times I would have to end up waiting for like a CTS 6 or 7 to take the trade because I needed those certain things to happen. So it's up to you on how much you need. I would typically say 4 is usually the minimum you would want. If you want to take and again, I take it, I don't look at advanced patterns as being in there, but if you want to take a higher probability trade, you probably need at least 4 because 3 is, major structure and RSI overbought. Is that enough? Ratio confirmation and an ABCD pattern for 3, is that enough? Right? You'd rather have an ABCD pattern with ratio confirmation at minor structure. That's a 4. So 4 is usually the ground level of what you need to take that combined technical score. Now, with that being said, as you evolve as a trader, you may add things, and that may dictate what type of score you take. I know a few traders that have added psychological numbers. So numbers that end in 0, like 5-0 or 00 numbers. They've added that to their CTS score because they know those psychological numbers are very important. They act very similar to support and resistance. So they've added that to their CTS system. What else have people added? Any of you guys add anything special to your CTS? I'm trying to think of what else would be added out there. I had a trader that came through our training course that added pin bar. So a pin bar would be worth 1 point. Or a lower low, lower close, that would be worth 2 points, something like that. So you can kind of adjust it, and I recommend doing that once you get comfortable with yourself. I recommend adjusting it to kind of work with what you value as a trader. Again, for me, philosophy-wise, structure is the main thing. So ratio confirmation is all good. I love Fibonacci extensions, retracements, inversions, but by themselves, I don't really care about them, to be honest with you. If I've got a cluster of Fibonacci ratios by themselves, guess what? I still can't take the trade. I need to have structure there. So I'm going to value minor structure, major structure a lot more than ratio confirmation. It's a good question. I miss my old trading plan. Look at this. Here's a quote for you. Trading hours, all hours. How awesome is that? Hey, Kia, what pairs do you trade? I trade all the pairs. Well, what hours? I trade all the hours. That is awesome. I wonder if this was I think this was the time. It wasn't this. It was, yeah, sounds like Danny. It was, what system was it I traded? It was not the Big Mo. Oh no, I ended up changing this. I used to trade a system where it was very similar to the Big. It was a mechanical system. So we give you arrows and stuff that told you when to buy and sell if certain requirements were hit. I used to trade it on a 4-hour basis, and I remember I would wake myself up every 4 hours. So I hated it because at the time when I went to sleep, but I would have a midnight candle, right? Would I have a midnight candle? Look at 9 o'clock. I'd have a 1 o'clock candle. So I'd wake myself up at 1 o'clock in the morning to check the candle and then try to go back and see if there's any trades there. Try to go back to sleep and then wake myself up again to check the 5 o'clock candle and then try to go back to sleep and wake myself up again like an hour later. And And needless to say, it didn't last very long at all. It was I was getting no sleep. It was horrible, and I wasn't making any money. I was waking myself up for no reason. Um, ooh, Jason sold New Zealand dollar. But yeah, I used to try and trade literally all of the hours, and it was my body and mind did not like me. So now I don't. Now I don't worry about missing trades. I understand, and I think that back then I really had the mindset that if I miss a trade, the world was over. Now it's like I don't. I'm very confident that there will be other trading opportunities. I'm pretty confident that um, you know there will be more chances to trade and not just the one I missed. But back then I used to fear missing any trade, and mainly because I was trading a mechanical system where it was a trend continuation system. So if I missed a trade, I needed those big trend continuation moves that happened during the London session. I needed those 200 pip moves to make my system profitable. If I missed them during the London session, I may have to wait a couple of days before I get another one. Um, because again, if you're a trend continuation system on a higher time frame, once you get a signal up here, once that thing starts going, boom, you may not get another one for another week. If you miss it, you're toast. How did I overcome it? I stopped trading that system. It just wasn't worth me being a trend continuation trader based on that system. Um, I was going to stop trading the system anyway. I don't like mechanical systems because I feel like I don't have control. I like having control. Um, I don't like when something else tells me to take a trade because I don't know why. I just know I'm supposed to follow it, and I've never been that type of person. Like, hey, follow me, guys, follow me into this dark alley. No, no. But again, I understood that. I don't have to. I'm never going to catch every trade. It's impossible. So why stress over it? I'm never going to catch every trade. You're never going to get everything in life. And also that health is more important. You know, it was not fun waking up with headaches and migraines and I was putting on weight because I wasn't sleeping the right way, and it was just health wise, it just wasn't working for me. Relationships were hurting because I was in a bad mood all the time. I was grumpy because I was tired. Um, and eventually, you tell yourself, "Hey, what's more important? Being happy at life or stressing yourself out?" And I chose life. So it was a combination of that, and again, mechanical systems wasn't my thing, um, which is why if you're going to do something like that, and luckily we have this is before people or before I knew that stuff was automated. You just if you have a mechanical system, just automate it, make it so it enters for you. But you will drive yourself crazy. Yeah, Charles says I tried it too. It was not good. When creating a system trade plan, you have to consider time of day, especially when you don't want to. Yeah, and that's what I started. I just took my trade plan, and that's what I started doing when before I ditched the entire system. What I did was I retested it, and I said, "Hey, all right, maybe I should test it on a different time frame instead of doing a 4 hour time frame. I can easily do something like a daily because a daily I know exactly when I have to check it each day, right? 5 o'clock New York time. That's the only time I have to check my chart. I can easily do that. Or trade it on an hourly and just break down different times. I'm going to watch on the hourly, but I'm only going to watch it between 6 a.m. and 12 a.m. and then again between, you know, and just back test it to see if it works during the time that I trade it. And when you back test it, you'll be, some pairs work really good during your hours, some pairs don't. So there's always a way to make it work. Always a way. Jason is short the Kiwi. Make some money, Jason. I got myself excited about that 300% return. Now, if we don't get it, it's going to be a failure. That would be really awesome. I'm telling you, 300%. Yikes. That would be my best. Well, I guess it's not me. It's Jason too. That guy. But let's just worry about the next good trade. If there's anything I learned so far from Mike Bellafiori's book, is just one good trade, one good trade, one good trade. Have you read that one, Charles? Yeah, put it. It's one of those. It's one of those books, kind of like Trading in the Zone. Mark Douglas is Trading in the Zone. It's one of those books where you read it and you're like, why the heck didn't I read this earlier? Yeah. What I like more is about it is the whole proprietary trading world. Understand that us at Trade Empowered, for the most part, we're just average Joes. Um, Typically when you get these prop firms, a lot of traders you see on Wall Street and stuff like that, they're like D1 jocks, big, strong, competitive men that are very, very, very smart. Went to grad school, went to school to study economics and whatnot. I don't know what you studied, Charles. I didn't do anything with economics. Jason didn't go to high school or go to college. Darren, I think, is a government guy. Darren's a spy, but secret agent, whatever you want to call him, ninja. But none of us went for that. So it's we never had that world of getting interviewed on Wall Street and going through that process. So it's pretty. Here you go, IT. It's pretty cool to see just the process they go through in evaluating the traders that they look to hire for their firm. It's a very extensive interview process. And one of the cool things is I forgot the what's the quote? I wonder if I can find it. It was I tested out on you guys. I got the book in front of me. It was like in the interview they ask you a question. It's like let me see if I can find it real quick before I butcher it. Here it goes. You want to make sure you have quick decision-making skills. And one of the things in interviews they do this. One of Steve's role in the interview process is to ask candidates questions that test their mental. In our business, 5 seconds can be an eternity. So the ability to process information quickly and react appropriately is crucial. In his book Liar's Poker, Michael Lewis writes of the big bank's recruiting technique where a candidate is instructed to crack a window that cannot be opened. This is a test of how a candidate will react under pressure. We do not go to these extremes, but we do search for evidence. My favorite of Steve's questions is, and then let me test this out on you guys. Try to answer this in 5 seconds, all right? I know there's a delay, but try to answer this in 5 seconds. You have 16 socks in a bag. 8 are white and 8 are black. How many socks must you remove from the bag to be statistically certain that you will be holding a pair in your hand? Ready? Go. 1, 2, 3, 4, 5. Boom. All of you guys are wrong. All of you guys are wrong. I was wrong too. The answer is, he says, not every candidate can do this well. Even those who look good on paper, some stumble. They're so nervous for the interview that they either outthink themselves or answer so quickly and cockily. They're so cocky to mask their nervousness. For those who can handle the tough questions and tough spots, they show an implicit passion for the markets in doing so. By the way, the answer is 2. All right. How many socks must you remove to be statistically certain that you have a pair? 2. All right. Just remove 2 of the same sock. Yeah. I got it wrong too. I'm counting fingers. I'm like, well, if I remove 3, then if I remove 3, then there's 5 left, and 3 could be one color, and then it's statistically the advantage. But I'm like, yeah, yeah, exactly. Yeah, I never thought just looking in and just taking out 2 white socks. But that's trading, right? That's trading. If you had a plan, if you think about the plan in advance, right? It's easy. But it's no different than when a trade comes up here, right? And you don't prepare in advance, and trade comes a structure, and you see the candle moving, putting the big wick, you're like, oh, ooh, ooh, let's sell. And then you look back and you're like, why the heck did I sell? In hindsight, like, why did I sell here? Well, because you got so nervous and worked up, you didn't have time to go through your process and actually rationally think about it. You just made an impulsive decision, especially when you give yourself 5 seconds, right? But for those traders who have a plan, right? It's if I were to ask you again, I'll probably ask this at the technical trader workshop. If I were to ask you again, you know exactly what to do because now you've already been through it. You've already worked out the plan in your head. You're like, oh well, price action from the structure. Oh, let me wait for that 2618 trade, then I'll take it. Cool, calm, and relaxed. So, but that was pretty cool. So I've been loving that book. Just again, I've never worked in a prop firm, nor would I want to. I've been asked to. I don't see that. I'd rather do what I'm doing. We actually have one of our traders that came through 12-week transformation. I talked to him yesterday. He's from France. He's thinking about moving to New York, taking a job up in New York to work over here in I think it's a prop firm. I don't know if you remember David Sua, Charles. Remember him? You heard that name before? He's been in New York for the last couple of weeks. I'm like, why don't you tell me, man? I'm right down the road, 3 hours. But yeah, him. And there's another one that worked for it. He said they have a trading psychologist on staff. You must meet with them. I think twice a week, just to keep sane. Yeah, that was him. Yeah. So it intrigues me to learn about this lifestyle, just because I've never actually experienced. I've heard stories. I've talked to people that have done it, but I've never actually, I've never heard of that the processes behind it. I've talked to people that trade on it, and you hear those type of war stories, but to see what type of characteristics they look for in a candidate and how they pick them and kind of how they take them through that interview process, and it's a big process. It's kind of cool to see. So I've been enjoying that book. I've got another road trip this week, so hopefully I'll have some more time to dig into it. And again, all you guys fail with that SOC question, but you can now use it. You know the answer. You can now use it to your advantage. So, any other questions today? We looked at 2618 trades. We looked at a little bit of money management. We looked at the CTS score, and we had some nice random conversations, which is always good. But anything else you would like me to address? Danny says, you know what I've noticed I've been doing, that I want to create a rule where I need to have enough time to examine the trade or else I won't take it. Most of the mistakes I'm making could be avoided. Now, so are you saying that you're just taking impulsive moves, Danny? Like you're kind of just seeing the chart open and then you're like, take it before it runs away? Something like that? That what you mean by more time to examine a trade? Just like yeah. Well, yeah. And you know what? I don't think you need more time to examine it. And if you do, a higher time frame is always a good deal. I just think you need to make sure you go through the process. Just make sure you go through the process in advance. Again, the point of a trading plan is you should have an if-then thought process written out for exactly what you need. So whenever you evaluate a trade, you should be going through a mental checklist. You shouldn't just be looking for, hey, double top. You should be going, okay, do we have structure? Yes, 1 point. Do we have Fibonacci confluence? Yes, 2 point. RSI, yep, 3 point. Retest, 4 point. Divergence, yep, 5 point. CTS 5, what do my rules say? I can take CTS 4 and above. Okay, well, take the trade. So I don't think you need more time. I think you just need to go through the process and not make those emotional decisions. and you'll see me do this in the live room a lot. And the lower it's harder in the lower time frames because things move fast. So I understand that point. And that just it takes knowing what you need to trade it. The faster you can see it and recognize what you need, the easier you can trade it. But you'll see me doing it in the live room a lot where you guys will be like, hey, Keel, CT double top on euro dollar at market. And what do I do? Do I click over to euro dollar and just take the trade right away? No, right? What do I do? It's Akil, but Akil, it's at market. Well, you'll see me. All right. Well, I draw my fibs on, right? I draw my ABCD on. And you know what, guys? If I miss the trade, if by the time I go through my process, if by the time I go through my combined technical score process, the trade is gone, it's moved 10 pips down, and guess what? I just missed it. Guess what? There will be another one. I would much rather miss a valid trade than involve myself in an invalid trade. Again, I would much rather miss a valid trade, not due to emotions, but I would much rather miss a valid trade due to being a little late on my process of making sure it's a good trade than rush through my process and take a trade that I shouldn't be in. Because a trade that I shouldn't be in could cost me money, right? And I don't want to lose money. I showed you guys the money management sheet earlier, right? I don't want to lose money. I don't want to have big drawdowns. Because that's going to hurt my equity curve. That's going to stop me from compounding. That's going to stop me from advancing in my money management. That's going to stop me from that 300% return. If I miss a trade, yes, maybe I miss potential profit, but guess what? I don't go backwards. I can't go backwards. I never want to go backwards. That's my main goal. Don't go backwards. So I don't mind it, but go through your process. And if you miss it, you miss it. Guess what? There's more than one pair out there. There's more than one time frame. There will be more opportunities. The market's not going anywhere. There will be more. But that's also why you've got to practice your process enough so it becomes like second nature. I don't know if you guys have ever played sports. It's like, eventually we call it muscle memory, where your body just does it without you thinking about it. You practice something so much in sports. I played all the sports. So it's like baseball, turn and double play. I used to be a shortstop. It's a process. Catch the ball, right? Slide the foot across the base. You actually don't have to touch the base, but slide your foot around the area of the base. Switch it to my throwing hand. Whip the leg out to avoid getting hit by the runner. Sidearm it to first. You do it over and over in practice. Catch, swipe, throw. Catch, swipe, throw. Catch, swipe, throw. What happens in the game when it comes? You don't think about it. You just do it because your body's used to it. Muscle memory. Same thing in trading. Get those reps in. It helps with that RAS. It's what allows Jason and I and other good traders to see patterns without even drawing them on. I mean, look what I do with the Fibonacci's. We joke around with the he's so good, but seriously, look at it. How many times have I drawn a Fibonacci in there and nailed exactly what it was without looking at it? How am I able to do that? Because I've done it so many times, I can just see it. And it allows me to shortcut that process a little bit. So when I see a trade that's at market, that looks like a harmonic move, ABCD pattern out of 1618, that structure, let's take it. And then I'll draw it on later to make sure. But I'm pretty confident in what I'm seeing, and I can go through that process of what I need really, really quick. And it takes time. It takes time to do that, but that should be a goal of yours. But again, don't rush into those trades, Danny. If you gotta let it go, let it go. There will always be more opportunities. Shoot, you can even get a retest of the same opportunity. But if you can eliminate, you say a lot of your mistakes are coming there. If you can eliminate those mistakes, you're going to save more of the profit you make. So, all right, gang. Good session today. Very good last question, Danny. And guys, don't be afraid to ask questions like that. That is why we're here. You guys have bought a service. Take advantage of it. Use me. Use me. Don't be afraid. Yeah, use me. I've made lots of mistakes. I've made almost every mistake out there. And if it's something I don't know, guess what? I don't know it. I'll refer it to Jason. When we get to money management and stuff like that, Jason, he's not the best of money management either, but he knows a lot more than me. So I'll see you guys tomorrow in the live room. We can kick off our trading week, or kick off my trading week. If you are trading today, good luck in the markets. If you make some profit, please share it with me. Much appreciated. And I'll see you guys tomorrow. Until then, plan your trade your plan. Take care, gang.